Well, if we had one word to describe last week in the U.S. stock market or U.S. economy, it would be anxiety. With a lot of news coming out, with the Fed lowering interest rates, with the U.S.-China trade war escalating again, the market, of course, reacted with a lot of volatility, mostly negative. And so it forces a bunch of different viewpoints to come out on whether or not we're going to have an economic recession, whether or not we're going to have another bear market. And first of all, we just want to level with everybody. We're going to have another economic recession. We're going to have another bear market. That's normal, unfortunately. When it happens is what's in question. It's not a matter of if, it's just when. Now, SCI's viewpoint is that economic recession is not imminent, that it will happen sometimes in the future, but not right now, not because of what's going on now. With the U.S.-China trade war, the U.S. has imposed an additional 10% tariff on $300 billion worth of imports from China. Now, obviously, the market didn't like that, and you saw a very big emotional reaction to that. And it was unfortunate that happened on pretty much the same day the Fed lowered interest rates, because that was kind of a signal that the economy is slowing down as well. Again, that's normal. We expect it. Don't want to be flippant about it, because it's hard to experience, hard to go through, but it's normal. So with this new tariff being imposed, the question becomes, is this what's going to push us into recession? SCI doesn't think so. SCI says that even if a 25% tariff is imposed on all Chinese goods, that would roughly amount to about 0.5% of our total gross domestic product, which is a small amount. So the facts don't support the U.S.-China trade war forcing us into recession. What could? Well, certainly a trade war on multiple fronts, as SCI points out. There's been talk of tariffing German auto imports, Japanese auto imports. You know, if we go into a tariff on all those, or a trade war on all those fronts, that could have enough impact to force us into recession. I don't think Japan or Europe really want a trade war, as they're fighting their own battles, especially Europe, with the whole Brexit issues they're facing, as well as a slowing economy there. So who knows if that's going to occur. All that being said, we want to summarize what happened quickly, and that is a lot of anxiety. The market showed it. The market reacts anxiously to news. That's the way it's been for quite some time now. But the data doesn't support the type of reaction we saw, and so hopefully we'll see some sort of calming of the waters in the market in the days to come. We don't know, but that's what we certainly hope for. Now, what do you do about all this? So you got to keep in mind, investors' number one enemy is often themselves. It's their emotions. It's selling when times get anxious, buying when it feels good, and we fight that ourselves. Everyone fights those emotions as an investor, but if you listen to them often, you'll make bad decisions. So what do we do? This is why we have our process, because times of uncertainty and anxiousness are going to happen. That's why we try and keep 6 years of income for those that need income out of the market, so that what is volatile, what goes up and down on a daily basis, is not impacting that income stream. And certainly if we do go into recession in a bear market, there would be time for recovery. That's the way we've approached it for the last decade, and we'll continue approaching this stuff. It doesn't mean that we're ignoring it or we want to ignore it. Certainly don't want to do that, and that wouldn't be wise either. But we don't want to emotionally react to it. And so we hope you have a great week. It'll be interesting to see how this week in the market plays out as news continues to come. Call us with questions, call us with concerns. We look forward to hearing from you.